Welcome to the deep dive. Today's topic, you brought us something pretty intense.
Yeah.
A major global event that's still unfolding, actually, the 2025 stock market crash. We're looking at some pretty alarming data that suggests a really rapid and widespread economic downturn. So our goal today is to break down what's been happening, figure out what's driving it, and try to understand how the world is reacting in real time.
Right. And the main source we're diving into today is a Wikipedia article on the 2025 stock market crash. Now, it seems to be a real-time account updated as things are happening in April 2025, and it gives a pretty detailed timeline, points out some of the major triggers, and describes the effects we're seeing across global markets and all those key financial indicators. Plus, it captures some early reactions from political and economic leaders. The thing to remember, though, is that because this is tagged as a current event and it's from April 2025, we're really looking at a snapshot in time, a very recent one, and things are still definitely in motion.
Right, it's a developing story, for sure. So let's jump in. The article zeroes in on a specific date as the real turning point, April 2nd, 2025. That's when President Trump declared Liberation Day. But this wasn't just a catchy phrase. It came with the announcement of some incredibly broad tariffs, and the article really singles those out as a primary driver of this market freefall. So we need to unpack these tariffs, what they are, why they were imposed.
It's interesting because this didn't just come out of nowhere. The Wikipedia entry gives some really important background. It points out that President Trump has been pushing for economic independence and protectionism pretty aggressively since the start of his second term. This involved ramping up existing trade conflicts, especially with China, and even starting new ones with countries like Mexico and Canada. His go-to tool has been tariffs. He's been using them more and more with the stated goal of boosting American-made goods and shrinking that U.S. trade deficit. So even before this Liberation Day, the markets were already dealing with a lot of uncertainty around trade.
Right, so the groundwork was already there with all these trade tensions building up. Then on March 21st, just a little over a week before these tariffs hit, Trump announces Liberation Day and promises these massive tariffs on any country that has a trade deficit with the U.S. And just that announcement alone seemed to have really spooked the market. The S&P 500 reportedly dropped by 10.1% in that lead up to April 2nd. That's a huge reaction to just the anticipation of these tariffs.
It really shows how sensitive the markets had become to the administration's rhetoric and actions around trade. And there's actually this kind of strange detail in the article about the timing. President Trump apparently chose April 2nd on purpose, specifically to avoid April Fool's Day. He reportedly said he didn't want it to be April Fool's Day because then nobody would believe what I said. It's an odd, almost unsettling insight into his thinking behind such a massive economic decision.
Yeah, it definitely adds this strange layer to the whole thing, doesn't it? So let's get into the specifics of these tariffs. The article calls them incredibly sweeping, which suggests they were more than just minor tweaks. Can you break down how extensive they were based on what the article says?
The Wikipedia article gives some really clear examples that show just how massive these tariffs were. There was this baseline 10% tariff imposed on almost all imports. The only exceptions they mention are for very specific resources, and they even call out the uninhabited McDonald Islands. Then on top of that 10%, they slapped much higher rates on specific countries based on their trade imbalance with the US. For instance, China got hit with a whopping 54% tariff. The European Union, 20%, Vietnam, 46%, Thailand, 36%, Japan, 24%, Cambodia, 49%, and Taiwan, 32%. These are not small changes. They represent a huge jump in the cost of bringing goods into the U.S. from a whole bunch of trading partners. The article also mentions the legal justification for these tariffs. President Trump invoked powers under the International Emergency Economic Powers Act. He declared that the U.S. trade deficit was a national emergency, and that gave him the power to impose these tariffs unilaterally. That move itself caused a lot of debate. Many people questioned whether it was appropriate to use those powers in this situation.
Wow, those are some really big numbers. It's hard to wrap your head around what that kind of tariff would mean for so many industries. And the article talks about the legal basis for this too, right?
Right, it does.
Okay, so Liberation Day hits, these huge tariffs are announced, and immediately the article describes panic selling happening all over the world's stock markets, including here in the U.S. It says this is the biggest global stock market crash since 2020, which was, if you remember, tied to the start of the COVID-19 pandemic.
Yeah,
that puts things into perspective, doesn't it?
It does. The speed and the sheer size of the drop in those first couple of days, April 3rd and 4th, are pretty shocking. For example, the Dow Jones Industrial Average, it tanked by 4,000 points in just 48 hours. The article points out that this was the first time ever that the Dow had 2 days in a row with losses of more than 1,500 points. Then you have Japan's Nikkei 225. It plunged by almost 8%. That was such a steep drop that it triggered a trading curb. Basically, they paused trading for a bit to try and stop the panic. And up in Canada, their TSX Composite Index lost 4.8% in a single day. And to show just how scared and uncertain investors were, the VIX, which measures expected market volatility, it doubled. It reached levels more than halfway to what we saw during the worst of the pandemic.
Yeah.
That's a huge swing in market sentiment.
Yeah, those are some pretty dramatic numbers.
Yeah.
Let's dig a little deeper into how North American markets specifically fared in those first few days. The article gives a more detailed breakdown for April 3rd to 7th.
So on April 3rd, the day after Liberation Day, the NASDAQ Composite, which is heavy on tech stocks, it lost a massive 1,600 points. That was its worst sell-off since the very beginning of the COVID-19 pandemic. The S&P 500 wasn't much better. It lost 6.65% of its value and came really close to triggering its own trading halt. Then on April 4th, things got even worse when China announced a retaliatory tariff of 34% on U.S. goods. That news sent the Dow Jones plummeting by over 2,200 points. The S&P 500 dropped another 6%, and the NASDAQ officially entered what's called a bear market, which means it had dropped 20% or more from its recent high. By April 4th, the U.S. stock market had lost almost $5 trillion in value. $5 trillion. It's almost impossible to imagine.
What were some of the immediate real-world effects of that kind of wealth disappearing?
Yeah, the sheer size of those losses is mind-boggling. And it wasn't just limited to stocks, right?
No, definitely not. The effects went beyond just the stock market. Oil prices also took a big hit. They dropped by 7% and reached their lowest point since 2021. This was mainly blamed on fears of a recession coming and a drop in demand for oil. And the article says the turbulence kept going into the next week, around April 7th.
Yeah, April 7th brought another round of big drops, and the article compares the three-day losses to Black Monday back in 1987. But there's this little glimmer of hope for a bit. When CNBC reported, they were citing Kevin Hassett, who I think was the director of the National Economic Council at the time, that the Trump administration might pause these new tariffs for 90 days, except for the ones on China. That news actually caused a little upswing in the markets. But then it all came crashing down when the Rapid Response 47 Twitter account said that report was fake news. The markets immediately reacted with another downturn. By the end of trading on April 7th, the Dow Jones closed slightly lower, but the NASDAQ actually managed a small increase after a big comeback during the day. It just goes to show how volatile and sensitive things were, reacting to every bit of news, whether it was true or not.
It sounds like a really wild ride for investors. So this wasn't just a U.S. thing, right? The article talks about how this market panic spread globally.
Right. It wasn't just the U.S. The impact was felt all over the world. Let's start with commodities. Crude oil prices really tanked because of those recession fears and the expected drop in demand. West Texas Intermediate Crude, or WTI, it went below $60 a barrel, which was its weakest point since 2021. Brent crude also dropped significantly by 3.7%. Then you have base metals like copper, which are often seen as a sign of how the global economy is doing. They saw price declines too. And the coffee industry got hit pretty hard because a lot of the major coffee-producing countries were now facing those new U.S. tariffs.
So these tariffs weren't just hitting the stock markets. They were having real effects on prices for essential goods in certain industries. What about stock markets in other countries?
Canada's TSX, we talked about that initial drop. Well, it kept going down. It fell another 4.6% on April 4th. Then over in Asia, South Korea's KOSPI index fell by over 5%. Japan's Nikkei 225 had its biggest single-day loss since March 2020, a whopping 7% drop. And if you remember, that's what triggered that trading curve, and it extended a whole week of losses to a total of 9%. Australia's S&P/ASX 200, it held up for a bit, but then it plummeted 6% in just 30 minutes on April 7th.
Wow, that's a widespread impact across Asia. What about Europe?
Yeah, Europe definitely felt it too. The Seto XX 600 index, which covers a lot of European companies, it went down by 2.6% on April 3rd and then another 3.1% the next day. For the whole week, it lost 8.4%, which was its worst week in 5 years. And the drops kept coming the following week. Barclays even downgraded its year-end predictions for the index. They basically admitted that this crisis is unlike anything they've seen before. The UK's FTSE 100 index dropped almost 5% on April 4th, its biggest daily fall since March 2020. Almost every single stock on the index went down. And Spain's IBEX 35 also had its biggest drop of the year on April 4th, followed by another big fall on April 7th. It's really significant to see such a unified negative reaction from countries that are usually allies. It really underscores how much damage these policies are seen as doing to the established global economic order.
Yeah, it really paints this picture of a synchronized global downturn. And even Africa wasn't spared, according to the article.
That's right. The Johannesburg Stock Exchange in South Africa, the biggest one on the continent, had its biggest drop of the year. It lost over 9% after President Trump reportedly put a 30% tariff on goods from South Africa. That really emphasizes how far-reaching the consequences of these trade policies are.
So we've gone through the timeline, the details of the tariffs, and these immediate global market reactions. The article also talks about some of the first responses from key figures both in the U.S. and around the world. Let's get into those, starting here in the U.S. What were some of the initial reactions from officials?
Well, according to the Wikipedia article, on April 3rd, after the markets had already taken a pretty big hit, President Trump said that things were going very well. He even predicted that the markets are going to boom, the stock is going to boom, the country is going to boom. The next day, he went on social media and told investors that he wasn't changing his policies and that this was a great time to get rich, richer than ever before. Then you have his Treasury Secretary, Scott Bessent. He also downplayed things. On April 6th, he said, "I see no reason that we have to price in a recession."
That seems really out of touch with how dramatically the markets were reacting. What about the Federal Reserve? How did they respond to all this chaos?
The Federal Reserve Chair, Jerome Powell, he reportedly refused to make any emergency interest rate cuts, even with all the market turmoil. And then to make things even more complicated, on April 4th, Trump shared a video on X, the platform formerly known as Twitter, where he basically said he was causing the stock market to crash on purpose to force the Federal Reserve into lowering interest rates. You can imagine that caused a lot of talk and worry about whether monetary policy was being manipulated.
Yeah, that would definitely raise some red flags. And the article mentions that President Trump got a lot of criticism during this market meltdown.
Oh yeah, he did. He got a lot of flack for going ahead with a planned golf trip and a fundraising event at his Mar-a-Lago resort in Florida while the markets were in freefall. On April 7th, he responded to the criticism on social media and even came up with a new term. He posted, "Don't be a panikin," a new party based on weak and stupid people. And some prominent Democrats, like Senator Adam Schiff, they were really critical of him. Schiff said that American families were watching their retirement savings go up in flames while the president was off playing golf.
That contrast between what the administration was saying and what was actually happening in the markets, plus all the political fallout, is pretty striking. What about reactions from other world leaders?
Internationally, there were also some strong and often critical responses. German Chancellor Olaf Scholz called these new U.S. tariffs an attack on a trade order that is essentially a result of American efforts. He basically said that Trump was undermining the whole global trade system. Then you have Australian Prime Minister Anthony Albanese. He was kind of sarcastic in his reaction. He was talking about how the U.S. even put tariffs on those tiny uninhabited islands, Heard Island and McDonald Islands. He said it showed that nowhere on Earth is safe from this. And of course, China reacted pretty strongly and quickly.
Right, China announced their own retaliatory tariffs almost right away, didn't they?
They did. On the same day as Trump's Liberation Day announcement, China said they were putting 34% retaliatory tariffs on U.S. goods starting April 10th. And President Trump responded on social media suggesting that he wasn't going to lift the tariffs on China, which probably made the market even more unstable. Then China took even more steps. They stopped importing from some American companies and put export controls on important earth minerals and technologies. A spokesperson for the Chinese Foreign Ministry said the U.S. tariffs were protectionist bullying and asked American companies to help keep the global supply chain stable.
So this is clearly a big escalation of global trade tensions, and it's creating a deeper divide between major economies.
Exactly. And these initial reactions really show how worried everyone is and how this could lead to a long period of economic instability and escalating trade wars.
Well, this has been a really deep dive into a situation that's still unfolding. To recap the main points for you, we've seen how quickly and broadly President Trump's Liberation Day tariffs shook up global stock markets, leading to big losses across different indices and triggering international concern and those immediate retaliatory measures from major trading partners. The speed and how interconnected the global economy is, that's really clear from all this. And the contrast between what the Trump administration was saying, all that optimism, and the reality of the market crashing, plus all the international criticism, it points to some serious economic and political tension right now.
Absolutely. And understanding what caused all of this and what the immediate effects are is crucial for you as you try to navigate the current economic situation, whether you're directly involved in the financial markets or just watching how things unfold globally. The extreme volatility we've talked about really shows how sensitive the global economy is to big changes in trade policy and how quickly market sentiment can shift. It's pretty dramatic.
And since these events are still so new, the latest update in the articles from April 8th, 2025, it makes you wonder how these ongoing trade disputes and the huge market reactions we've seen will ultimately change global economic relationships and the very nature of international trade in the years ahead. What kind of long-term consequences might come out of this initial economic shock? That's something to really think about as we continue to follow these developments.
Definitely a lot to consider.
Thanks for joining us on the deep dive, and we'll keep you updated as the story unfolds.
Until next time.
Bye.